Welcome to the daily update for Thursday, February 3rd, where we'll look at the action in the market today and then see how things look for Friday, February 4th. It was a pretty crazy day, not necessarily a surprising day if you were watching things before the market opened. We gapped lower and then we just continued selling. A lot of this is being blamed on earnings reports, especially from Facebook or Metaverse or whatever their new name is now. But that gave a real negative tone to the day. The one thing that's kind of interesting is, yes, we were down and down strong, but from what I can see, and I'll back this up with the charts that I'm going to show you, there wasn't a lot of technical damage done. Yes, the bias and the momentum has switched more from being positive over to more mixed to even negative, but a lot of the charts are not necessarily reflecting that. So could we recover on Friday? Of course we could. Now, one thing I do want to point out, when I do these videos, I have no bias whatsoever. I go to this with a totally objective mind. I try to keep subjectivity out of it, and I just look at things for what they are. I'm not pulling for the bullish side. I'm not pulling for the bearish side. I just want to look at the information and then reach a conclusion based on what I'm seeing, and it is what it is. So I haven't had any feedback on this, but if some of you that watch this think, oh, well, he wants the market to go up or he wants the market to go down. That's not my intention. My intention is just to show you what's happening, pick up on if we're trending or not, and then go in that direction. I'm pretty much neutral overall because the way I do things, I'm constantly adjusting them so I can quickly take advantage of whatever is happening. Okay, so let's go through our daily video update. Again, just to make an announcement, there is a Facebook group that is available to you where you can come and speak your mind, ask questions, share your thoughts. We can have Q&A inside of that group. The one thing that I did add on this slide is there are two ways that you can try to contact me. One is john@spxinvesting.com. That's through email. And then at the very bottom is my Facebook link. So if you're already on Facebook and you want to look me up that way, I've had this account, my goodness, back to 2008 or so. So it's been around a long time. And instead of having all these crazy numbers at the end, I actually have a username at the end. Okay, so let's go back over what happened on Thursday. We did have a gap lower at the open, and Facebook was used as a catalyst for that. For the first time in their history, they're actually seeing declining users. And of course, Facebook has turned into a bit of a controversial company. And so a lot of people don't like that, and they're leaving Facebook. I have a lot of friends that are leaving Facebook. There are other people that think, no, this is a really good platform and I want to be able to say what I want to say, but they're not seeing a real objectivity anyway on the Facebook platform. So their earnings ended up being lower for this particular quarter. As we got along midday, prices did drift lower throughout the session. There really wasn't any buying the dip. Any of that was quickly stopped. As we got closer to the close, there was increased selling, and prices didn't close at the low, but they cleared. Okay, let me back up. Prices didn't close at the low, but they were near the low of the session, and we ended up being down 2.44%. You'll notice right away that I don't use numbers. I always talk about this in terms of percentage, because 100 points in the S&P now means something completely different than 100 points 10, 15, 20 years ago. So I always look at the percentage change. Now I realize for those of us that do option strategies, we do have to pay attention to numbers because of strike prices. But when we're evaluating the market overall, I just look at percentage up or down. Volume was above average. And the fixation, of course, on Thursday were the Facebook earnings, and there's some other companies too. And I have some charts that we'll go over quickly. We're still seeing overall some improving technicals. Believe it or not, we dropped almost 2.5%, but not a lot of technical damage was done, at least yet. But we could see a real weakening. And of course, anytime we see a real downward movement, that's going to do some technical damage. We're still dealing with earnings, depending on what company's coming out. There's still inflation in the air, and interest rates really climbed on Thursday. And of course, the continued geopolitical concerns. We also have the Olympics coming up pretty soon. Even though that's based on athletics, it's a highly politicized event, especially this year because they're being held in China. So look for that to possibly bleed over into the overall sentiment of what's happening in the markets. As far as some comments that we can make, we did see selling that continued into the close. It was a negative day, but still a lot of the technicals that I'm going to go through are still showing some improvement. Are really short-term indicators? No, they're not. They were down with everything else. But more of our intermediate term indicators, they're still holding up, at least right now. We're still seeing small caps and mid caps lagging behind. And we just kind of fell back down into that little sideways movement that we've been in. But one thing, just as I started recording, after hours, the S&P 500 futures are up over 1%, and the Nasdaq futures were up just about 2%. So at least in the after hours session and overnight session, we're seeing what potentially could be a bounce. Now, we have the big employment situation report coming out, and that'll be at 8:30 a.m. Eastern. That could change everything because that's a really big and influential report that we get on the first Friday of each month. What happened was that the European Central Bank, ECB, and the Bank of England, BOE, they raised interest rates. And they're seeing some inflation throughout Europe. And they went ahead and decided to raise interest rates now, where the Fed is looking, the Fed can change interest rates at any time. They don't have to wait until there's an FOMC meeting, but they usually do that to maintain more of an orderly process. So in Europe, interest rates were raised, and of course that makes the euro, the basic currency that's used throughout Europe, that made it more precious. So that sent the value of the euro up. Well, the other main currency is the dollar, and the strength that we saw last week has pretty much been wiped out this week. And I'll have a chart of that later on. We are still overvalued. And as far as our trend, we are in a trend, but it's a little bit mixed right now because we're seeing a continuation of the rolling over to a weakening trend. The bias is mixed, or it had been more positive, and the momentum is also mixed right now. So we want to see how things play out, especially on Friday. So what happened during the session? No real change as far as our overall sentiment. We're still in the middle with that. The VIX, it did see a real rise on Thursday, and we closed near the top of the fear gauge for Thursday based on the S&P 500 VIX. Then also looking at the VIX of the VIX, this also saw a real climb on Thursday. So a lot of people that were expecting a continuation of the rebound, they suddenly found themselves needing to hedge their positions, and that shot the VIX and the VIX of the VIX also higher after hitting that resistance that I talked about in yesterday's video. 10 out of the 11 sectors were negative, with communication getting hit the hardest. Discretionary continues to really show some problems. Tech got hammered again. The one sector that was up on the day were consumer staples, the things that you have to have no matter what's happening in the economy. So that was actually slightly positive. And then we still see that energy is really doing well since the recent high set in the S&P 500 and discretionary is really having some trouble right now. As far as inflation, our BDI ticked up slightly, but it's really not moving all that much right now after massively coming down in what a lot of people are saying is a real inflation feared environment. So we're still kind of letting this chart play itself out to see if it's telling us anything useful. It has been going contrary to what we would think. As far as our technical alerts, because we had a down day, there was a lot more red than green. The dollar has a bearish MACD crossover because of the fall. Oil was above 90. That's freaking a lot of people out, even though it's green on here. And it set a 4-year high. The Nasdaq went below 13.9. S&P went below 4,500. The Nasdaq, before that, I should probably read this from the bottom up, but the Nasdaq fell below 14,000. We're seeing things like materials and cyclicals. These are more value plays. They both saw a positive crossover with their MACD. And then the Nasdaq, which just kind of was going down, down, down. Real estate, the euro, because of the strength that was seen on Thursday, it had a positive MACD crossover. Financials and utilities. Again, some of the more value plays saw some more positive action on Thursday, where a lot of the more growth-oriented areas saw a real decline. Okay, let's look at the chart. And we knew this going in. I was following the futures. I watch them all the time. And we had come up on Thursday right to this resistance level. I didn't see it as major resistance, but boy, that kind of turned out to be something. And then we gapped lower into the open on Thursday. We saw some initial selling and we kind of chopped sideways. Well, a lot of people were probably looking at each other saying, are you going to buy the dip? I'm not going to buy the dip. I'll buy the dip if you buy the dip. Nope, I'm not going to buy the dip. So nobody ended up really doing anything. And that led into more selling. And then we ended up going down into the close, and we closed just off of the lows on Thursday. And really, this is what I'm talking about. We came up to what could have been short-term resistance. We fell back down, but we're just slightly below the pivot level. We haven't really breached any other support levels yet. Doesn't mean we won't. We're just looking at how it is right now. We're down 6.65% since we hit the all-time high back in January. So from this red line at the very top, and this is an intraday chart, but I do it based on closing prices. So here's the high that we set, and then where we finished on Thursday. Growth saw a real decline as value saw an increase in comparison to each other. The Nasdaq 100, it really took a bath because it's really heavy laden with tech stocks. As far as our trend, this is what I'm talking about. We're still rolling over as far as the ADX. The black line is starting to go over a little bit. We're still above 20, so we are in a trending environment, and we would default to that being a negative trend overall. But we're seeing other indications of things turning more positive, at least if we can bounce Friday out of what happened after Thursday. So we saw a bit of an increase in the selling pressure with the ADX and a decrease in the buying power. As far as our breadth, yeah, it was a negative day. You can't take it any other way. Both based on price and volume, we're turning down a little bit in our line charts as well. The one thing that has held up kind of well is the advanced decline ratio. Yeah, we dropped below 0, but we haven't dropped below the red line yet. New highs and new lows. This is one thing that's a little more positive. Even with the negative day, we saw an increase in new highs and a lot less of new lows. So this is beginning to show some improvement, and our 10-day moving average is turning up ever so slightly. So the market internals are showing things a little bit more positive. Then the accumulation, it was down because we had a down day, but we still remain above this moving average. And as long as we maintain the blue line above the red, that would give a chance for the red line to turn up, which would be more positive. As far as our short-term charts, after closing above the 20 on Thursday, well, we broke down from that on Thursday. Did I say Wednesday, Thursday? And then we saw some pretty much across the board downward movement with our 20, 50, and 200-day moving averages. Then after coming up into this conglomeration of moving averages, we fell back down. We're still above the 200 period moving averages. So that is potential downside support. And then the MACD, which had crossed over positive, even though it's rolling over a little bit, it continues to flash a positive signal. The Swinland short-term oscillator, it's continuing to advance based on price and volume. The McClellan oscillator did drop just slightly below zero, so that's negative, but the summation index is just kind of turning a little bit, and I'll show that here in just a minute. The Stoke RSI, which is very jumpy to price action, after giving an extreme positive reading, has now dropped back down. And then this is the rate of change for 1 day. As we were going up, I made a note that maybe we're going a little too far, too fast to the upside. And then we shot lower, had a day or two where things seemed to be evening out a little bit. Well, with the massive action that we saw on Thursday, now we're down in extreme negative territory, which may lend itself to some type of a bounce on Friday. Then the rate of change going back 5 periods, we're still coming off of that extreme positive reading. The boom indicator, which I hadn't shown for a couple of days, with this action has really switched back down. We had been showing some real positive improvements with this, but with the decline on Thursday, we're seeing this looking more negative. As far as our intermediate term, right now, we could say that the 50-period exponential moving average acted as resistance, and we're bouncing down from that. That could be negative. But then the PMO is still slightly, it went a little sideways on Thursday, but it's trying to cross back above the thinner line here, both based on price and volume. Then our other PMO study, where the rising PMO did decline, those that are generating buy signals, that continues to go up. And those that are above zero, it flattened out a little bit, but is still having a kind of a positive leaning right now. And then this is also kind of a surprise, because we had this base earlier and we came up out of that. Well, if we're coming back down, we're not seeing a lot of new point and figure buy signals, point and figure sell signals being generated. So we didn't see a real big move. In fact, the BPI went up a little bit on Thursday. Our rainbow, yeah, we're watching this blue that could be crossing below the red. It's happened before, and we've been able to recover from that, but we're watching to see, will that happen this time as well? Stochastics, after being pretty much positive across the board on after Wednesday, we're looking a little bit more negative. Short, intermediate, long-term is still looking more positive. Summation index that I talked about earlier, going a little bit more sideways based on price and flattening out just a little bit based on volume. The RSI, which I hadn't shown in a while, it had climbed above 50, which is positive. Well, now we've dropped below 50. Our momentum oscillators, the ones that are looking positive near the top, they're still showing some improvement. Our longer term oscillators are still negative, and our more intermediate term oscillators are still showing what could be improvement. Then the chicken money flow, it had gone positive after Wednesday. Well, it stayed positive after Thursday. As far as our different trading systems, the Elder, which is more of a short-term trading system, after having some green bars, we didn't even go back to blue on Thursday. We just switched right over to red. So that's negative. But on the next chart, the SAR is still putting in a dot below the bar. So we're going to have to see some continued weakness for this to switch back to negative. So on our Elder system, that's negative. On our SAR, we're still positive. Some of our different charts, the Heiken Ashi, yeah, showed a little bit of weakness on Thursday. The Kegi chart really didn't make much of a change. And then I keep calling this by the wrong name. So I just put Renko chart here on here. I kept calling it Kegi, different names, but we're still showing some improvement on this chart that we were seeing yesterday, and it hasn't registered what happened on after Thursday's action. The 3-line break is also looking fairly positive still. Because we're falling back down into that area that we were in not too long ago, it's not doing a lot of damage to the charts. Then equivolume, it was down because we had a down day. The ease of movement based on one day is negative, and over 14 periods is trailing off negative as well. Then this is another thing, because we're back in familiar territory, we didn't see a change in the point and figure chart. So overall, these things are not getting picked up by the different measurements that we use. Now, if we continue to go down, you're going to see lots of negative things happen. This is just after looking at the close on Thursday. Then the Ichimoko Cloud, I just wanted to bring this up because we came up into the the lower end of resistance and maybe coming back down out of that. Our long-term chart, not really seeing anything that's telling us much between the S&P 500 and the equal weight calculation. Broad market, here we're seeing a potential rollover in the S&P 500, but things could recover from here. In the mid caps, we're kind of going back down into this sideways range that we've been in, and small caps, we never really broke out of that, so we're still inside of this range right now. Then here's Facebook. This is where it closed on Wednesday, and this is where everything happened on Thursday. It was down 26.39%. Amazon got hit pretty hard. It was down 7.81%, although not as bad as some of the other companies. And then Spotify, which has been heavily in the news lately, it was down 16.75%. And then another one that reported earnings that just got hammered was Snapchat. It was down 23.5%. Then the FANG stocks, yeah, they just got hammered and they closed near the low on Thursday. ARK also had a pretty bad day. It was down 5.61%. So a lot of the tech stocks really got hammered. Now, looking at some technical features here on the Dow, we're right above the monthly pivot and we're still above the 200 period moving average. That either one of these could provide some support. Small caps are having some trouble, and we're seeing the death cross with the moving averages. In a good, healthy environment, you want the small caps to really perform well, if not outperform the rest of the market. We're just not seeing that now. So that's more of a negative backdrop. Mid caps, after coming up to resistance, have now fallen back down. The Nasdaq, which had closed right on the pivot on Wednesday, well, it dropped back down on Thursday, and we're kind of free floating now. We're below both moving averages, and if things wanted to turn negative, technically you could make a case that we have more room to fall. The Nasdaq 100, kind of the same thing. We closed above the pivot on Wednesday, only to lose that on Thursday, and this could go back down into the range that we've been in, or fall back down because we're below both of these moving averages right here. Then the Vixen, and this could potentially be positive. Yeah, we saw fear really increase on Thursday, but we closed right in about the middle. So we didn't close at the high, we didn't close at the low. This is why I'm more neutral right now. I'm getting more of a mixed message from what I'm seeing. NYSE, after going slightly above the 50 period moving average, well, now we're right back down to the 200. So if we're going to find some support, we're seeing it through a lot of different indexes right now. There is support built into these charts, and we may be able to bounce from here. If we don't do that, then it could get pretty ugly to the downside. The Wilshire, it has lost support. It had been above the pivot and it closed at the 200. Well, it lost that. So is that telling us what's going to happen? Or are we going to see some of the other support come in, see some buyers enter the market and push things higher? As far as our broad market, the dollar just got hammered. We were really looking pretty good last week. Well, we've given up pretty much all those gains this week. On the daily chart, we dropped below the moving average slightly on the weekly chart. Oil, man, we're up to $90 a barrel again. So like $90 a barrel, whatever. It's like the song we sing, beer on the wall. Gold continues to flounder sideways and was slightly down on Thursday. Silver, it was down over 1%. So we're not really seeing any real breakout or breakdown necessarily in the precious metals. CRB was up slightly on Thursday, 0.19%. As far as bonds, yeah, we saw interest rates shoot up 30, 10, 5, 2, pretty much across the board. Interest rates were up. So what's our outlook for Friday? There has been technical damage. Anytime we have a down day, that's what's going to happen. But the conclusion that I've reached is it's not significant yet. If we see follow through selling, yeah, things could get a lot worse. But we're still at a point of potential recovery right now. The long-term trend is up, but we're still seeing some signs of weakness, and we'll always see that. There's always something to be worried about. In the best of the best environments, you can still freak out about something. In the worst environments, you can still see something positive. We just want to weigh the two with each other and then see what happens from that point forward. We're still in the middle of earnings season, and then we have the big employment situation report on Friday. And then there's still this Russia-Ukraine thing lurking around in the background. And if that ends up happening, what's the US going to do about it? And that could really impact the markets. So our conclusion is I've switched back to mixed for right now. The S&P is mixed, short-term, intermediate term are both mixed. The long-term bias does remain positive, but we're still showing some of those signs of weakness. So thank you very much. Have a wonderful Friday, and I will prepare the video for Monday over the weekend. So have a really good weekend as well.